gonna do? It's Sharky. Shark is in the house. We got him. We got him. All right, guys. What's up? Happy Monday to everybody. Hope you enjoy. We're having a little fun. Market's kind of in chop mode. Nice little pullback today. Sharky, what you got? What you got on deck for us? You got anything going on today?
No, just took a little short. We took a little long here. I'm just milking the last little bit on a long, and
Yeah.
just here excited for the show. Mondays obviously usually set the tone, kind of range. So we'll see. But things are looking. We had a nice bounce back.
Yeah.
Filled in the gap. Back into yesterday's range. So not too much to report.
No, for sure. We'll take a look at the charts too, guys. By the way, I really love where some of these markets have bounced too. So we got a couple updates on some trades, and I have maybe Sharky wants to go over his Google chart because he's I think he's still long and strong on there. So I might be able to walk through what he's looking at on that one. Let's go, man. But aside from that, welcome if you're new. By the way, every Monday we do this. It's a little kind of like get together, kind of take a step back from the market. You get your morning trading in, get that session over with, and then the lunch hour hits and the market kind of stalls and tends to digest. And you know what? Monday afternoon's probably not the best time to be trading options. And your boy's an option trader. So, this is the time I like to take a little breather in the market and kind of assess, just like Sharky was saying, go over what we've seen last week, what's important in the market, what's coming up on deck this week. By the way, no trading this Friday. The markets are closed. I believe futures may be open, possibly the bond market. But we will have some stuff coming on deck on Friday. So it's going to be a wild weekend, long weekend, 3-day weekend for any of you option. Look at this guy. Is that Evan? Oh, he's in the house. Yes. So short week in terms of options. Expect some accelerated decay, by the way, for any option traders out there. It's just what happens, just kind of the thing. The rest of the stuff here, we have just kind of like catalysts on deck, right? We have a lot this week, but it was a wild day in the markets last week. We had a huge FOMC candle, which candle meaning like the daily move. If you don't know FOMC, that's kind of like the big announcement in terms of Fed policy and things like that. And we'll go over some of the commentary, but I'll give you the whole story in a nutshell is basically Powell versus the Angry Bears. and that is essentially the deal, right? And yes, Evan, stock market news, by the way, amazing follow. Give that dude a like out there on X. PC on Friday with the market being closed. That's what I was talking about this week, right? So it's going to be a funky trading week. Accelerated decay, again, 4-day week, 3-day weekend. But Friday, oh my goodness. And TrendSpider in the house. Good morning. Good morning. I do have some stuff I have TrendSpider pulled up. I want to show you guys some really cool stuff in terms of their seasonality stuff that we should, I think is going to be useful for us. But again, this is the gist of it, right? I'll say this, I got a little bit of back and forth with Sharky and I when this was coming out, and it was, what I'll say is that the market was absolutely expecting hawkish commentary. The market was expecting Powell to come out and be hawkish, and that's not what happened. And so that's why we got the reaction that we got. I think in terms of his actual rhetoric, he probably walked the line really well. I'll just go over a couple of the things that I basically took out. The second that the notes came out, and this is before the speech started, and it caught me off guard too, because usually we have that first move, which is typically a fake move. And then he has the speech starts, and there's a little bit of Q&A. And what I'll say is usually the first move is the fake move, but I didn't catch this. Sharky, maybe you did, but in the notes release, it was basically out there, this this first headline: we believe that our policy rate is likely at its peak for this tightening cycle. And I'm pretty sure like that just sparked the rally, if you will, which, as an aside, doesn't mean that we're going to be cutting rates. It just means that he's not really looking at any kind of hikes. So it's definitely not. It's not hawkish, right? It's that was kind of like set the tone for this dovish commentary, which really I think the market was caught off sides on. honestly. I really think that the market, well, it doesn't matter what I think. What's true is the market was caught off sides, and we can see that in the charts, right? Some of the other headlines, an unexpected weakening in the labor market could warrant a policy response. And I think this is where he's trying to like toe the line, right? Like be just barely on edge. Yeah, sure, data dependent ish, but we believe rates have peaked, and now it's really a question of when, right? Not that it wasn't before, but the question isn't if they're going to cut rates, it's when. And based on that when, that's when you can kind of like backtrack into how many. So the market's toying with this June or July right now. And the the market's priced in a little bit higher probability for June after that FOMC commentary. But Sharky, anything stand out for you? Sorry, on that last one this Friday?
On the Friday? Or you mean for
Friday, on
FOMC?
FOMC. Wednesday.
No, we were talking about that a little bit, where he was talking about, potentially cutting in June, but now I think, is it a price at a 69% chance for June? I think
It was out of the gate that day, but now it's
right.
come down
I haven't looked. Yeah.
it's come down to about 62% as of this morning. But again, those are kind of like floating numbers, so just be aware.
Right.
If we do see, I'd venture to say like a 50% probability that gets pulled back to, that might be the buying opportunity. And I think a lot of people have been pulling in this like waiting for this dip, and that's when I said Powell versus Angry Bears.
Sorry,
that Angry Bears comment was Tom Lee on I think it was what's that show called? Oh God, I forgot the name
Tom
of the
Lee
show.
is the biggest bull.
Oh, Tom Lee is major. And he threw out the 300 IWM target, actually, which to me I already had anyways, but he locked it in for sure. And that's very much a rate story, right? So we broke that trade down a little bit last week. We can kind of briefly look at it this week. There was a CNBC survey out also. I don't know if you caught this, but they had I didn't put the stats in there, but there was a probability of a soft landing went up to 52% now from 47% earlier, and a probability of recession in the next 12 months fell to 32% from 39 and 63% in November. So survey says soft landing is coming. And that's from like a bunch of economists, strategists, and fund managers, give or take, and they're all calling for generally 2 to 3 rate cuts for the year. So, other than that, major news in the market: Bank of Japan raising rates for the first time in 17 years. We briefly mentioned this last week, and I do want to bring this up this week again because typically, so the Dixie or dollar index is heavily weighted to the euro, and then also has a lot of the yen in there. And typically you would expect, I think we would have expected to see that the yen rises, which would have essentially pushed the dollar strength down in that Dixie index, but that's not what happened. So I think right now we're seeing a little bit of sell the news in the yen, which is kind of pulling back maybe some gold trades and seeing a little strength in the dollar. But we got to see if that kind of shakes itself out. So that's the only one kind of concern right now in the very, very near term. Hopefully that's a sell the news event in the near term, and then that kind of comes back to normal. Other stuff, DOJ suing Apple. A lot of people calling for the bottom. A lot of comparisons to Microsoft. Who knows, man? I bought it higher. I'm still in it. I'll probably buy it some more because I haven't owned it in a really long time. But the chart's just still not ready. But what I did want to do was I want to pull this up, and in TrendSpider, and I mentioned to them, we'll have some things. There's a seasonality. If you don't have this, where is it? It's on the right hand side. You can kind of pop out different reports, but seasonality here is an option that you have, and it's pretty interesting. So March, April, and because I was looking at this, because I remember definitively that like July, 4th of July is like every year Apple kind of rockets no matter what. I'm looking at this. Okay, here's that July, August kind of rip. And I was looking for, is there another one near term, and there is 60% of the time over the last 3 years, Apple tends to rally. And I was just kind of going through these, and it was really funny how clean this is IWM, the Russell, that January effect. So how clean you see that kind of like peak out. So March, April, May, June are pretty much really strong months for IWM small cap index, and that kind of peters off after July, and that gets you to that sell in May kind of go away thing. But this is all in TrendSpider. They have this seasonality tool right here. So seasonality for SPY over the last 31 years. Some free stuff. I think this is huge. So we've been talking about, hey, we're in a election year. I'll just make this a little bit bigger. It's funny, we're here in March, that end of February into March kind of seasonal weakness. We're pretty much over. Coming into April, coming into March and then April. April is one of the strongest months of the year over the last 31 years. So I don't really want to miss it. And I'm definitely thinking that right now, this is going to be kind of a dip buy opportunity. So really, what are we looking for? What we know for sure is that we're not fighting the Fed. TrendSpider's here. You can see this percent gains value per month too. Yeah. I don't know how to do it monthly. All right. Well, you could check this tool out. It's a free tool. This is not a shill or anything like that. It's something that I use from time to time. I thought it was really useful. If you don't know that this exists, hey, here it is. Seasonality for SPY. You can kind of just pop this up. And you can put in any ticker you want, right? So we just did it for Apple. I was thinking, hey, maybe Boeing's getting there. But no, this is not a strong month for Boeing. So I'll hold off for a bit. We'll see. But anyways, back to the topics, right? So Apple, Google, Meta all got hit again, also with another little lawsuit, or not lawsuit, but it's like a ruling or something. Did you catch this at all, Sharky? So there's a new law that's been out, I guess, for about 18 days, something like that. And I guess they're finally doing something with it, but talks about Google, Apple, Meta. This is why, if you're wondering why these three stocks are kind of weaker right now, they're in focus right now in terms of the new European Union law about some new test of digital privacy. Anyways, there was some other stuff. I don't think it's huge. Biden signs a $1.2 trillion spending package for government funding until October. That puts a pause to any kind of notion that there might have been a government shutdown. And that brought me to another thought, looking into this stuff. And I'm like, part of what's pushing the market too, and why we might stall a little bit longer, is there's this thought, if you look at the NFP numbers and things like that, the government spend, government payrolls, that's probably like one of the biggest movers, right? And it turns out the government spending is 40% larger than it was pre-COVID. And that's kind of unfortunate, because that's not really how you turn around an economy. You want to do that in the private
sector. That's a wild stat.
Yeah, it is a wild stat, somewhat concerning, but you know what? What's true right now, I'll just put this aside, right? What's true right now is, look, we're not fighting the Fed anymore. That's for sure, right? So that's good news. And, everybody's talking about, okay, well, we can focus back on earnings, and earnings have been pretty decent. Even the ones that are not raising maybe going down after the reports, it's mostly on guidance, right? They're still beating current, but they're not guiding up, or they're not guiding up as much as the market may have wanted.
It was interesting though. Overall, even the last two earnings sessions, they really weren't. I was expecting weaker numbers overall. Really weren't that bad.
No, it's
and I was kind of surprised. I agree with what you said, but for me personally, I thought we'd see a little bit more pain from the rates, but really didn't. But companies like Apple and stuff, they do still have a lot of cash on hand. And obviously IWM did get, hit, and they're the most sensitive to that. But still overall, the main companies really just, they held their ground,
They did. And I tracked the Dow 30 too. So I'll tell you this much. It was 29 beats, 1 meet, no miss. I don't think I've ever that's probably the best that we have on record, to be fair. And then to me, one of the big headlines of the day, Boeing president and CEO Dave Calhoun, I don't know why I'm smiling, stepping down. There was a ton of, noise last week about him, the board going to a meeting without him. And sure enough, there's a massive shakeup in the works. Boeing was up just insane in the pre-market, instantly sold off. So we'll have to see, right? Boeing sold off, starting to come back a little bit, kind of retested that pre-market low of where that announcement hit. But if she can, I'll just say this, Boeing has already hit my full downside target. So, and it's been a little while now. So it may, I hate to say it, it may be ready. It may be ready to roll again. So we shall see. Appreciate all you guys out there too. Love you. Long time. But and then one I don't have, and someone is mentioning for sure, UPS. I don't know what day it is, but they do have an investor day this week. I can look that up. UPS investor day. Actually, if you guys know, throw it out in the chat. But there's an investor day coming this week. Looks like, I don't know, but that's something that's after FedEx earnings, the buyback and everything. UPS did get a huge sympathy move, and then they do have an investor day tomorrow, the 26th. Look at that. Yeah, investor day, March 26th, 9:15 a.m. That's tomorrow, pre-market. So definitely something to watch right there. That's tradable, very likely.
We also have Adobe
earnings
at the conference as well.
Oh, Adobe conference. Nice. Yes. What do you know what day that is?
No, that's as much information. I think it might be all this week. I'll throw you out that bone, but I know that it's
good. March 26th also. So Adobe, they have a summit, right? I just Google investor day or something, then the ticker. So investor meeting, March 26th. Adobe Summit 24, March 26th, investor meeting. So at 2 p.m. Pacific.
There you go.
There you have it. And that's how you look it up quickly. All right. So we talked about the Fed or the market pricing in some of these rate hikes. So this is what we're looking at. So June on the screen, this is CBOE Fed Watch tool. Very, very simple, easy to use. I click compare. We're going out to June right now. This is where we are as of this morning, 62.63% of a 25 basis point rate cut. We were down here in this 50% probability. And then this is what you're talking about earlier, Sharky, where this Friday of last week, we're at that 70% plus probability. So the market pulls this back slightly, and the market pulls back slightly. You can kind of see how that works just quickly. And I did happen to get, I grabbed July's also right here. And this was interesting to me as well. So this is a 46% probability. It's just really flat. Because if we're looking at June, so 50 to 2,500 to 5.25, 5 to 5.25. And this is still 5 to 5.25. So maybe not. The market's pricing a back-to-back rate cut, right? So that's actually not so bad. It's this one right here that if this guy starts to crank up, I don't want that, right? And this is only a 38% probability if we do have the two. I guess we could talk about Disney. So we do have something is mentioned. Yeah, Disney with the breakout for sure today as well. A couple things recapping on the economic data points last week. So probably the biggest things, I think, housing starts. So this one, building permits, housing starts. This is more like rate stuff. So if the rates do come down a little bit, I think, there's a lot of sentiment around, okay, so somehow the builders have been able to just really continue to rally through this whole nonsense. But if the rates do come down, they probably go actual parabolic mode, because that, they've been throttling the supply for quite some time. If they're able to open that up, it might just go crazy. So we'll see. Home sales, existing home sales, this was Thursday. So actual coming in at 9.5% on a consensus of negative 2.5%. That was a major delta from expectations to me. And Sharky, you'll like this. So Wednesdays we get our oil status reports. And this was in like very, very notable as well. On Wednesday, you get the oil status report. And if you guys remember the SPR, or Strategic Petroleum Reserve, this is that. And consensus really is that, like, yes, we know that we drained a lot out of it, but but we're thinking that they would be refilling it. Guess what's not happening? None of that's happening. I'll tell you that the rig count's not going up, which we get those on Fridays, and the actual crude and gas stats are down. I mean, look at this, down 1.9 million barrels compared to a consensus of roughly flat, and over double what we were down on gas. So if you're wondering why all the refiners, Marathon, Valero, Exxon are rippy this week and have been since this, there you have it, right? So if you think oil prices are going down, I don't know. It's going to be a while. And this bottom piece right here, you guys may or may not have heard about the dot plot. Are you familiar with that, Sharky? The dot plot.
Yeah, for the Fed watcher. For the Fed.
Yeah, this is just off my economic calendar, but this is really kind of where we were. So interest rate projections moving forward. So came down from 4.6 to 3.9, down second year out, down to 3.1 from 3.6. And then current was at, or prior was at 5.4, current now to 4.6. So that's kind of like the rate that's out there. Take it for what it is. It's just their forecast typically wrong. Across the board, April is a huge month. Oh yeah, across the board, this is true, right? So this is transpired. Another example of seasonality is oil names during election years. Interesting. Okay, so oil during election years, I'll just go to Exxon. Was it reports? No. Checklist. Learn. Where did it go? Analysis. Oh no. Season. Hello. Geez. Adds to the sidebar. Exxon. Oh yeah. Look at that. So this is just Exxon. March, April. That's pretty heavy, right? VLO. Yeah, March. Let's just do this. XLE, the index. Oh yeah, boom. Strongest months by far. So another example of how that tool can be used. It's pretty cool, man. I like it. I love it. All right. So so anyways, I'm going to just go. So this week, the only thing that's kind of notable that really stood out, aside from what we'll talk about on Friday, is that we got a lot more liquidity coming back in the market in terms of note auctions. So 2-year, 5-year, 7-year, back to back note auctions on deck. So remember, right now the story is all about rates and starting to be about this balance sheet, right? Which is what Powell started to talk about last week. So it's tough. They're issuing more debt. This is in the terms of these note auctions to pay off existing debt. This has got to like taper somehow. But right now they're staying the course. Durable goods tomorrow. We did get, as an aside, we did get one other today. That it's not usually that big of a move, but a Dallas Fed manufacturing index. We had the New York manufacturing index down significantly. This one came in today, not a big market mover, obviously, but significant downside miss. 14.4 on a consensus of -8. So that might start to be notable. If we're having some kind of like chop, it's because we're still getting mixed signals in terms of the actual data. Wednesday, we get another oil status report. If it's anything like last Wednesday, look, I think we continue on.
Well,
Third,
there was also some news actually out earlier about Russia cutting 9 million barrels,
yeah,
something like
um,
that, till up until June. Something like
yeah. There
that.
is
So that
actually,
that that just came out today. So we'll see. I mean, I'm still bullish on oil. CL still over 80. So
yeah, I think so. Between seasonality, the stuff going on in the Red Sea, and our strategic petroleum reserves, it's really hard not to be bullish on oil. Um, but I think it's a layup type trade setup right now. Anyways, even if the market kind of stalls or stagnates, uh, it feels very much like a layup trade to me. Um, and then Thursday we get Q4 final GDP reading. That's going to be important. But the craziest thing is Friday, while the markets actually closed, we do get the real PCE reading. And then I think I have on my calendar a Powell speech on Friday also. So if you're a futures trader, you might be able to grab this. But for the options family, sorry, no can do. We'll see. Um, but that is what it is, right? That's why over the weekend between Friday, Saturday, Sunday, open on Monday, I'll guarantee you that we have a gap, right? Between Thursday close and Monday open, guaranteed gap weekend. That's all I can say. What direction? Nobody knows. But there will be a gap for sure. So anyways, so that said, so earnings review, like I said, 29 beats, 0 misses, 1 meet, even, like the likes of Nike, and, who just kind of dumped, actually beat their forecast. So it's all about, like guidance and things like that. So regardless of beats, etc., this is still one of the best quarter. This is the best quarter I have on record over the last year and a half. So this is 6 years or 6 quarters, year and a half of data tracking the Dow 30. Um, what can you say? 29 beats, 0 misses, 1 meet. It really doesn't get any better than that. And if it did, I'd be like, oh crap, we're probably, I mean, that's pretty good. On deck this week, not a whole lot. Some people might be looking at Walgreens Thursday before the open. I like to trade my RH. This is a big mover Wednesday after the close. But by pretty much in large, we have hit earnings season is complete, and I think we go into a little bit of a blackout period for a lot of things, and then we'll start after a couple weeks up again. But that's pretty much it for right now, except that Miss Cleo is ringing
well,
again.
we didn't also mention, one thing that I wanted to also
Yep.
comment on when we're talking off, some of the rates and stuff. The PPI I think was really the outlier, right? Wasn't that 6 something? Wasn't that like?
Oh yeah, let me pull that calendar in really quick.
So that's interesting, and I think
I don't
that
know how I didn't have
obviously the Fed's very data dependent, and they often play behind the 8 ball, so to speak, more of reactionary than proactive. But I'm surprised about the 50-50 shot, especially with the PPI being such an outlier, more so than CPI. And
Yeah,
if we are continue to be bullish on oil, that's also going to, can bleed into this inflation that may remain sticky. So I'll be surprised, if they start cutting, and of course this is just my opinion. It's not, I think it might be a little bit too early, but
yeah.
they're in a tricky spot with the labor market right now as well. So it's kind of like they have one hand out and then they have one hand tied behind their back, and they are limited in their tools.
For sure.
So because they really only have 2 of them.
This was this was VPI, right? So not last week, the week before, the 14th, right? So, and yeah, it came in double consensus on the headline month over month, and then do you have the year over year? I have to change that to lower. Anyways, year over year was higher too as well. Just lost that. So, anyways, yeah, 50% higher on the core. So consensus 0.2, coming in at 0.3 actual, but the headline 0.6 versus 0.03 or 0.3 consensus. That was pretty brutal. But yeah, Sharky, Is that Miss Cleo? Is that okay? I think we're live. So we got the reading. She came in clutch this morning, last minute. Sharky, does anything stand out stand out at you here? I don't know what these cards are. Ace of Wands. So it's a 1.
Well, I think the first thing that stands out is that we don't have. Wait, okay, we only have one, the Temperance.
Temperance.
Okay, well, only one. I'm just. I was looking for how many of the major arcana are in the spread, and not too many
Monday,
here. So
Tuesday,
more of
Wednesday,
the
Thursday.
minor, which usually have a little bit less of an influence, or technically weaker cards. So
Yeah. I see we have a 1, we have a 7, 8, and a 10. That's kind of weird. So let's go. Theme card, Ace of Wands. Same card we drew last Thursday, which appeared after FOMC rally and led to a bit of topping process. Does this continue the journey, or are we reversing back higher? Card is slightly red historically, so I think following through on Thursday's energy seems likely. Could also just hint at a week full of new starts. Still, Ace brings strong energy, and I think the trend this week should be obvious, especially 8, 7, 10. Oh, 8, 7, 10 of the same suit to close the week. I don't know if that means anything. All right. I think I had. Let me close this, close that. I have the rest of them. Where did they go? Oh, no. Let me get it. It's here, I swear. Okay. All right. So Monday. Do we want to read Monday? Today, starting new journey. Ace starts, and then start the week with a card that appears at the beginning of journeys. It says we're spending time pausing to collaborate the plan. Yes, we haven't gone anywhere since this entire stream started. Literally nowhere, which is code for low energy chop. See a trickle grind lower, but I wouldn't expect large moves. Dips will be bought, rally sold. Tuesday does tend to finish green, so I would not be surprised if we turn around Tuesday. If we're red today, turn around tomorrow. Still rallies will be sold, dips will be supported, play upside, but don't expect big moves. And then Wednesday, she's saying had a 3, then pause, now 7. This could suggest the continuation of Monday's work, but I should note that it is slightly positive historically. So Wednesday rally. She's calling for Wednesday the move, which means any downside is unlikely to produce a worthy short. 8 of coins is likely to fail in bringing strong moves. Its theme is just keep working patiently, hone our skills. This means you shouldn't take any major changes to your positioning and just need to wait this day out. Chop wood, and carry. What is that? Oh, bother.
that's like a Zen thing. Chop wood, carry water. I
Okay.
forget. Yeah,
She cracks me up,
just means
man.
be chill.
Be chill. All right. It's clear. Thursday, 7 of Pentacles. 387 says retracement. Oh, so Tuesday, Wednesday, up. Thursday, pull back. Unlikely Wednesday card. This brings slightly negative bias. So does that mean we're mostly positive? Oh, so if we close on lows Thursday, because of basically Friday's closed PCE number, don't expect a major move. And should one appear, it's probably so. This makes sense. So anticipation, market likes to anticipate, right? So today pull back, Tuesday, Wednesday bounce into anticipation. Thursday, kind of like chop it out, pull back slightly. Maybe we rally Friday or Monday and then gap up into all-time highs on Monday.
Well, the other thing to consider, though, also we are at quarter end, and we're coming into month end. So, especially during the quarter end, we could see some repositioning, and that's just something to also consider as we head into the end of the month.
Yeah.
Well. So, it's also going to be interesting on Friday, with the markets closed and getting out, that PCE, right?
Yeah. You bring up
and
a pretty
getting
good.
that, so that'll be interesting. But we'll see if we get any type of repositioning.
No, I think that's a good point, right? So I'm going to go back to TrendSpider's thing, and sorry for Miss Cleo for pausing your stuff, but here's SPY's seasonality. So we're closing out Q1. That's going to be the last day, or is it going to be the last day of the month? Yeah. And then we're going to start April, which is one of the best, if not the best, months of the year. So I'm just that's my sentiment right there in a nutshell, if that makes sense. I mean,
Also, besides the fact that we are in an election year cycle,
and an election year cycle, yeah. So the setup is bullish. You know, that's what it is. The setup right now. Don't fight the Fed. That's all I can say, right? So Friday, market's closed. Continue.
You know what though, but when they do start cutting rates, everybody think of that as bullish. It might not end up being as bullish as what people think when they actually do it.
No, typically
we're not there yet, but we'll say it's just something to keep in the back of your pocket.
I will say, like, legitimately, typically the actual rate cut is a sell signal.
Right.
It's a legit sell signal for the larger indices. I will say though, for the KRE, which is what we were talking about last week, and I'll get to this in just a second, but for the KRE, that would be like explosion point, I think, for me, right? Like if and maybe like the anticipation of in terms of now, like that would be, I haven't seen the KRE breakout. Let's just go there. KRE is not broken out yet. And so if that starts to get, like, if the anticipation starts going.
Oh, we got Frank in the house.
Yeah. If the anticipation in the KRE gets really overheated, that could be pretty good, man. But yeah, the actual rate cut, maybe it's a short-term sell. It's a short-term sell, but it's typically a buy when that happens. So anyways, Miss Cleo's recap is a slow grind Monday, stronger grind Tuesday. Sounds about right. Wednesday should try to bounce. Thursday should retrace. That's the end of the open market. Friday continues what we started on Monday. What is she talking about? Monday is down, so she thinks it's going to be down. It should be directional week. That's easy to trade, but the low energy may frustrate traders. Hey, that's been a theme lately. Anyways, so what do we got?
So there you have it. The divination has been done.
There you have it. All right, so I'm just going to take a quick check at the broader markets right now. So I was talking about something earlier this morning. So this candle right here, this is a 30-minute candlestick chart that I look at pretty much every day. This is my opening view. So SPY, Qs, diamonds, IWM. Right now I have some metals. You could put like CL down here for crude futures. TNX, the 10-year yield, and the dollar. So these are the main things right now that should be on your radar. These four are pretty much constant. But looking across the board, right? So fundamental event, call it right here. So from the lows of this FOMC candle, number one, this orange box right here. And if you follow me on Twitter or X, you'll know that what I said was that there is a trigger to know exactly when a market goes into a rest period. So markets are either running or they're resting. They're not like running and then reversing. That's not how markets work. It's just not how it works. So a rest period looks like this, very slow chop. And the trigger is if you move the length of an average week within a 48-hour period, you should go into a rest mode, right? So this is 1 day, 2 days, right here, right? So from this low up to really just here, that's 48 hours. This is an FOMC candle. We can expect some continuation, which we did. And that was it, right? But at this point right there, 2% in a day. Market tends to rest for a little bit. So what did I do? So today pulled out in the pre-market, just a quick fib from this FOMC low to the highs, and a 50% retrace on SPY. Boom. That's exactly what the pre-market was this morning. Can we get down to a 618 and retest my NFP high? Oh, that would be a beautiful buy. To me, this green line, if you don't know what that is, that's the annual uptrend. So from January right here, the entire market has been in a definitive uptrend, if you didn't know. And that is that trend line. Every time we've kind of breached it, it's actually ended up being a nice little buying signal. We're not there yet, but that little NFP retest 318 would be a nice little spot if we get it. Not saying that we do, but a chop for now is absolutely in the works. Qs, very similar story, or similar, not exactly the same. So from NFP low to the highs, just this opening range tag on the low end, just about a 618 retrace from that move. What I will say is this chart's very different on the Qs versus SPY. So same annual uptrend from the lows, right? This is actually from October. If you were to take it just from January, but these lows all kind of line up. We're below it. So this one, not so much. And in terms of the, like my NFP stuff, this is still very much in the chop zone. Whereas if we look at SPY, it's well above that first Friday of the month's high. So, but the Qs are not. So why am I not like pressing Apple and things like that? This is it, right? So, and it's just we're still kind of in chop zone. I think the diamonds of all of them were very much the most extended. So having today's pullback makes a lot of sense. But again, we're right back there retesting this kind of prior break here. Can we kind of undercut this? Yeah, for sure. That Dow 4K number, which is so close, man. 39.99 almost. That's wild, man. Wild. So, but again, take this from an annual perspective. Just like these are very long. Oh God, how long does this trend go back for? Okay. This seems to be like COVID low. I don't know. November, whatever this trend is, this is from those lows. We're a bit extended. I don't think we go all the way back, but yeah, I think, can you come back? Right now we're retesting this breakout. Can you tag that 390 and slap a buy on it? Probably. But these are not just like, the thing that's different right now is that the Qs have not broken out yet. I will say holding over this, very bullish. They should break out, right? And they should break out next month. SPY, just from this NFP perspective, it's a clean break for sure. And IWM holding up the rear. To me, still at the best kind of like buy zone because it's towards the very low end of that NFP level. So snipes down here on that sub 200 liquidity grab, grabbed it here, took a little trim. Now I want to see this hold over this 205 for this week and really just kind of rally back up. And I'd like to see this breaking out next week, if not this week. I'm going to do gold really quick, just so I know I have a trade on. So this is super dependent on the dollar right now. And I was just mentioning the Dixie a couple seconds ago, the 10-year, that's definitely going to be on watch. I don't think it goes anywhere. If you're trying to trade TLT directionally, good luck to you. I think I wouldn't. Neutral option strategies all day long on something like TLT, which I think I said last week was like buy right, something like that. But the dollar is the most concerning to me. I want to see this pull back, right? So if the dollar can't pull back and the dollar starts to break over 104 spot 8, I got to close that gold trade. And there is a pretty heavy like consolidation that we have going on right now on gold. This is GLD, but this is the volume profile on the right hand side of my screen. It has to hold over 200. So if for whatever reason gold loses that 200, I will just say these guys talking to each other.
Yeah, I'm with you on the gold trade, and
I like
yeah, the problem is now that you're talking about it, and I was doing my analysis yesterday. I was looking at the Dixie. The Dixie looks bullish again.
Yeah, the dollar has to
bullish again. I might just get out.
So to me, a daily close over under 2, it's a wrap, right? Exit stage left. It could even be a short trade. I'm just going to say this. Listen to Sharky and I. We're not falling in love with the trade. The trade is good to me, but given certain criteria. And just because I like it now, if the environment changes, look, I have to be able to like exit stage left if that's the case. So
why don't we pull them up? Why don't we pull the Dixie and gold up side by side? Can we do that?
Yeah. I can do that really quick. I was going to give you a minute to do to do
Google.
Google's. Yeah, but we can do this. So
Well, Google, it
DXY on
made
the left.
most of the move, to be fair, that I was looking for, but
Oh, beautiful.
my thesis on it was a bit similar to your IWM trade, which really hasn't done it yet.
Right.
You know, it hasn't hit the high. Google was lagging. You know, Apple's it's a bit too heavy for me, but you know, it's kind of a catch-up trade, and that's why, you know, obviously we've been talking about this on X. You know,
Yeah.
IWM probably the best trade out there, but obviously the rates is the issue. But
Yeah.
I mean, it's not, you know, the divergence there. It's the only one that hasn't made the all-time high. It's going to want to try to play catch-up.
For sure. Yeah. So I think this is what we're looking at in terms of the dollar, right? So dollar is kind of sitting up here. If gold pulls back, right, the pullback is going to take you to about 190 is how it's going to be, which would be a $10 short, which would crush any long-dated options, and you have to exit stage left. I think that's available if it happens. What will tell you that it's going to happen is if this Dixie cracks this 105 level, right? That's not going to be fun. And then you get into this liquidity here. So I think, you know, this is gold. I'm going to switch this to a weekly chart really quick on both of these, just because you can see it a little bit better. So almost exactly inverse. So here's the low on gold. This is November. Here's the high on Dixie, September. Where's May, June, July, November, right here, right? So they're both, this is topping out and this is starting to rally over here. So nearly inverse, but gold's a little bit more extended versus the dollar having pulled back. So where gold is right now, this is a good spot where it should reject, but I need to see it. I need to see it reject, right? This 104.60 level right here. This is massive, right? This
Yeah,
is
the 104.50, 60. We start getting over that, and we're going to get to that 105. If we get over 105, it's going to be an issue.
Yeah.
For me.
So all this right here, and I think a lot of this unfortunately has to do with that BOJ stuff. Maybe a little to sell the news, which is why my thesis was okay. If this is so the yen, which I forgot what the.
And usually, if people don't know, the yen and the dollar are inverse. It's an inverse pair as well. So
yeah, wasn't there something? FXY is just the yen itself. So like the yen's actually going lower, and I did hit a little bit of a headline. So like why? So Japan hiked interest rates. Why is the yen falling? This is not, you know, I did read a little bit of it, but generally speaking, it's mostly like, okay, sounds like sell the news type of trading, and that's what they're saying. But we'll have to see, right? But what's true is, regardless, this is a tough spot for the Dixie. It should reject. I need to see that reject for gold to continue to the upside. Otherwise, you know, also back to that, you know, the market moves average weeks range within a 48-hour period. This is a massive range. Quite frankly, I think this is more like a quarterly average, an average quarters move that gold made within a week or something like that. So an extended stalling period would not surprise me either. So trade still.
I know we don't look at the futures too much, but I was looking at the GC contract as well, and that's the problem is I have here is how it kind of broke out of that balance range and it's falling back in it. It kind of looks like a little bit to me like a failed breakout on the
chart
gold
or
futures, huh?
The chart or
yeah. See
So
how it broke out there? That's the 1 hour, right? And then it fell back into the range. That I don't like that look.
Yeah, so that's the same. So this level right here, 2165, it's about 200 on GLD. So same kind of thing. So this is hourly chart, GLD right here. Same setup, right? That we're looking at. Big move, 199, right? On GLD. So that's why I'm saying we have to hold this level right here. Otherwise, it is an exit stage left. And this next push, quite frankly, really has to. I really want to see this next push crack right up here, because if it doesn't, then that's more like a signal to, yeah, we do stall for a while.
Yeah,
If
and
we
it's
if we
time to
don't
get
get
an
too
iron
long.
condor or something on because it's probably going to range
Yeah,
out in that
yeah.
area for a while.
If Evan was actually on here, that he would be like, "Good to know TLT is chilling. I need gold to pump. We're gonna set a notification we do get the yeah, absolutely." So I mean, all that said, you know, the general market is set up to kind of like stall for a bit. Sharky, you want to take a look at? So what I'll say, I give Shark a hard time about Google, mostly because I'm talking my book, right? Um, I sold my Google because I was so frustrated of it. Just like, you know, this is the prior all time high right here, about 150, and it had spent so long in this basic level right around 145, give or take. I mean, 6 months plus. It tried to break out up here. I had bought it down here, but this was the better part of a year, 6 months, 6 to 9 months, dead money for me. And then it had that failed barred move somewhere over here, failed release, AI release somewhere over here. And I was like, okay, I'll exit stage left. And I did exit stage left right around like 145. But now they have, you know, I'm gonna give it to you, Sharky. Now they have all the shenanigans about this partnership with Apple. And, you know, now I look at the chart as like a 6 month plus consolidation. And I'm like, okay, if it does crack, you know, I guess it cracks. But this is what I'm looking at. So I'm not giving it up just yet. I'm not in, and I'm not long. But what are your thoughts here, my friend? This is a weekly chart. Good old Googles. You're muted.
Sorry, I was muted. I
You're muted.
really want to see a recapture. You know, what did take a nice down move today, but a recapture of 150 I think would be ideal. Then of course we've got to sweep that swing high at 152. 15 over that. I'm looking at 155, but really we came into the equal highs there right now. You know, it's just for
Yeah.
me, it's just a little bit about the cherry on top. You know, I have May contracts, so I've got time. But you know, if you are thinking short, you know, you're not crazy to think of it here. You know, being up at this critical level. So, but you know, as long as it holds the bottom of that gap,
Yeah.
I don't really have a reason to get out. So
I hate to give this to you, Sharky, but what, you know, back when there was a little chart called Microsoft, and I think we were looking at a weekly, and it looked somewhat like this, cup and handle. And I said, this looks like at about 313. I was like, this looks like a 400 something dollar stock. And sure enough, if you guys don't remember, that's exactly what happened. And we did call this, right? So I will say that Google here looks like Microsoft right about here, 338 to me. So what does that mean for anybody that may be in a position like mine? And this is a monthly chart. The monthly looks really good. We're not out of the woods yet, so it's really going to be up to next month to see if next month's candle opens up above that 150. Oh yeah, it's a wrap, right? She goes, and you need to get back in, right? But until then, you know, like that's going to be 151 for me. There's one thing that's sticking out to me like a sore thumb, and it's a very clean, clear, legitimate session gap. And this was from a weekend session gap. So this is Friday to Monday on the 15th of March. So there's a heavy session gap, 141. And then there's a ton of carry through volume here. So what we've done right now is last week and I'll just kind of like watch this volume profile on the right hand side. So last week, this is what happened, right? We gapped up over the week and we spent the majority of the week kind of chopping in here. And we haven't been able to break out just yet. Do we break out? I don't know. If we do, you'll see a daily open and close above that 151. Sharky's going to be screaming. He's going to be super happy. Until then, I would venture to say, you know, I might be looking. This is what we call a half gap, right? So measured from that session gap, and I'll even give it to this pre-market high on Monday. Half gap has been that 146 level, and it's really stalled. Half gap meaning halfway from the gap to that pre-market high. So this is the halfway point, and inside that half gap, we have our kind of like what you call a golden pocket, right? Right in here, and we've tagged that a couple times. We have not gotten through. So, my gap rules, Sharky, say go with the gaps. So I don't see it breaking yet, but if I do get, here's the trigger. If I see it below 145, we're probably going to fill that 141 in very short order. I don't see that yet. And if we get to that 141.30, I'll buy back in. I'll buy back in just because now I'm kind of getting a little bit of FOMO. But that
But
said,
this is also a great example. We had that gap up, the running. Here's a great little of a micro. Because we talk about it usually from a macro perspective of the running or resting. I think this is also a great micro example of that. We had the gap up, and now we're in that range compression, and we'll see what happens.
No, exactly right. So we haven't had this happen, right? And so I think if this happens, this is going to be like some point, this week or next, and it would easily be like that to complete your weekly. What do you want to call this? Your weekly saucer cup, right? And your handle, and before you get steamy. Yeah, that's what the pattern people have been looking at. Anyways, that's an idea. So just as an aside, that's one. I think Sharky and I are both on this Freeport level. It's a very big move also. So Freeport, I'm getting a little cautious on as well, just because we've rallied to a very difficult level. I might take this off if it doesn't continue today or tomorrow. Just because it's the same thing. It's a huge gap up moves. And we're right into a very difficult level. I think 95 is a big deal. Closing over this, then we should actually start, really breaking out. But I don't want to get.
This is so critical here for SCX. But if it breaks out, and
exactly.
I think we kind of talked about this and a bit before, maybe in the last video, but kind of that broadening out of the market. I mean, QQE and RSP are now pretty much in lockstep, where we had that divergence before. Yep. In the markets, and Google is one of my long trades, as we discussed. But I'm really trying to stay away from tech and looking more at these type of trades on these names that really haven't seen the rotation of the money into them. And that's where I know you're looking at you have a great knowledge of a lot of different tickers as well, and I think that there are going to be really still great long opportunities out there. It's just not going to be in the same spots that people have potentially been accustomed to over the last quarter. Obviously semis being the main one. So we'll see.
I'll just point this out. If you're not familiar with this ETF, this is OIH, the oil services sector. This is a weekly chart. I'll show you a monthly. Perfect example. So we were just talking about energy. This is oil services. Yeah, my favorite in the group is like SLB. Chart looks very similar. So these are, if what are the other ones? Baker Hughes, BKR, I think is another one right there, right? HAL, Halliburton, also right there. Boom, boom, boom. All this stuff is super constructive in the oil services sector. So I think very interesting here. If there's a big rotational catch up and oils continues to be strong. This has got an insane amount of upside. I'm not even going to talk about it much more. But other than that, back to some more fun stuff. Hood, by the way, are you long Hood? Because this thing looks ready. Hood is probably completing some of its topping formation right now. I think this one I feel like it's ready to rock and roll pretty soon. So another push to the upside today. If she can get over 20, I'm looking for that 23 to take profit on some of my longer term calls. But that's a big target on Hood for me. Coinbase, look at this. Look at that. Massive 280, 300 incoming, man. Have you seen this chart, Sharky? This is nasty.
Yes, I
Yes.
have. The coin chart is absolutely, ridiculous. The Hood I
Ridiculous.
like. The coin, the premiums are just so expensive, with the Ivory and everything. So I'm just watching it.
So speaking of, so we're on with Wolf and Granite Shares, and they have recently released a 2x long ETF.
Oh wow.
Coin L, and look at this bad boy, right? So just saying, if coin equity premium is a little bit more, do not trade options on these, but just so you know, it's available. Coin L.
Oh god, can you imagine options on a leverage ETF? I mean, for a day.
No. The bid ask spreads are probably like 90% wide. You don't mess with those. But yeah, I think the rest of the team probably looking at Nvidia here. You're near targets. It's getting a little toppy here. I'll say this one also likely breaks out. Oh, Nick wants to look at red.
Another one. Since we're wrapping up under the other trade ideas. I got one more that I'm watching.
Yeah.
GM.
Ooh, okay. You want to talk about it?
Yeah, it's Bucky. Yeah, if you go to the weekly bull flag breakout on that, it's a little chasey for me up here. I am just going to be watching since it had that big move. It's kind of similar in that FCX. I mean, look how it's, kind of trying to peek out of this major range that it's been in. If it continues, yeah. So I'm looking really for a potential back test. It's just something I have on watch. We come back and back test that breakout there. But this is another similar situation. Why am I going to try to go long on NVIDIA or AMD that have had these moves where here we have a potential of a major breakout on a name that look at all the upside potential there versus something like on a semi. So this is kind of some of these names. Even airlines have been pretty strong. Delta has been making some good moves. The Jets ETF. So I just think that that there's just a lot of other opportunities that people might not be paying attention to of names that haven't hit all-time highs yet that could present good trades for the long side.
Yeah. Like even these little cruise lines sometimes too. It's getting wild here. I think these are kind of the areas too. I do want to look at Carry. So Carry still very much in its consolidation. No breakout here. This is one to watch. If IWM is going to go, it's going to be because of this guy right here. We're toying with it, right? So this is that volume shelf right over here. Needs to hold. We're really just testing it as we speak. So Carry holds over here. This is looking decent, guys. I mean, real decent. So that would be a breakout, like retest again. So we want to see this. We want to see this one go if she goes. I think that's it, man. We've gone through a lot for sure. There are definitely some others on watch which I am not thinking of at the moment. I will say, Tesla constantly on the radar. Obviously not ready yet. Oops, not on this. I don't want that one. I need this guy here. Wrong chart for Tesla. Did you know Tesla caught a downgrade today and went up? Tesla caught a downgrade today and went up. Where is my trend line?
Tesla is really tricky.
I don't know where my so anyways, it's probably on a different chart, but it's still in this wedge, right? So this is broken down. Everybody knows that. That's gone. This guy, we're just gonna draw this fresh for you. So I'm gonna take these lows here, and then really like
Sniper, you don't know bang.
We still got room, downside room, I guess here. Should I just take these two recents? Yeah, still kind of consolidating. I don't know that she's ready. This thing has just been so disappointing, Sharky. She's been down like bear flag after bear flag after bear flag. Just no fun. So just be careful. She gets a little rally
It's a
mode.
downtrend until it's not. So just
Yeah.
let the chart be your guide.
Yeah. So it's basically kind of like she's just kind of done this, cranks
Yeah.
up, cranks up, and I get it, right? But there it is. That's the one I was looking for. Oops. Every time she tags this, she does bounce a little bit, but at the end of the day,
Oh boy.
it's not till like
Yeah,
these
you go.
major liquidity grabs that are decent like that, right? But she can't get out, right? That's the danger here. So yeah, it looks like she's gonna bounce again, but you got to be really careful of this prevailing kind of like downside wedge because it could be a little bit longer. All right, Bucky. Bucky's an L, man. Yeah. Well, Bucky's in Wakanda. Bucky's in Wakanda. He's getting his arm worked on right now.
Yeah, I'm looking at the 45 calls for GM too, but
there you go.
Fut.
Yeah.
Fut Bucker.
Yeah, Bucky's in Wakanda. This is your kind of like volume shelf right here.
Bucky.
If you don't know, Snowflake, the Winter Soldier's name is now Bucky. It's this volume shelf right in here. Sub 150 if you want to nibble at it. But even just because it gets there doesn't mean it's ready, right? They could spend another 6 months just kind of chilling. But yeah, and this one, careful, right? If you're looking at short Tesla, right? Where was the spot to be short on Tesla? It's at the top of that trend line, right? It's not up here because this does this, is what I'm saying. It gets there and then it cracks, whoosh. So it's like way later. So right now, as an example, like it might be upsides, and it's gonna look real bullish, and then at some point it's probably gonna retest this right here, something like that, somewhere along here. But it's gonna retest all this stuff, and it might, or even here, this volume shelf there, and it might just chop, grind, rug. Careful, right? And if it breaks out, that's fine. Look at this trend line, wait for the retest, then go. We've yet to have it. This is what that looks like. This is just kind of like go. But this is why right here, this is why you don't take that first break, right? That's a perfect example of why we don't take the first break. You wait for a retest, and then sometimes if it could fail, and you don't want to be in there. And then you see that consolidation. Okay, cool. But even this, no, just a fail, right? So super cautious. Anyways, why do I use a 3-hour time frame? I like these things that are divisible by 3. I don't know. I like the 3 minute. I like a 6 minute. I like a 1 hour. I don't like a 4 hour because it wasn't exactly the first half and back half of the trading session. But a 3 hour just seems to capture a lot more of the meat to me. That's all. It's not really a thing. Just me. Yeah. Monster MSTR. You know what that is? It's all Bitcoin, right? So I'll just say that it's not MSTR as a monster. It's Bitcoin. Look at this candle, Sharky. You see this monster candle on Bitcoin? Hello. Talk about a breakout of your flag. There she is in all her glory. Do I have? Yeah, Bitcoin. It's going right. we like Bitcoin. It's yeah. I like Ethereum better. Last time we talked about it, we talked about this ETHE Grayscale Ethereum Trust. I think an Ethereum ETF is coming. We sent this long in our group, right around 25s. Looks good. That's
it. We covered all the bases.
Yeah. So I think we're good, man. I'm looking for Sharky's theme song.
Oh, well, actually, I got one thing. Can you pull up VVIX on there?
VVIX? Sure.
Don't give me that look. Don't give me, yeah, why
VVIX is going to get delisted, honey. So VVIX is the volatility of the VIX, if you do not know, right? It is a 1 day tracking of volatility of the VIX. Duh.
Look at this in this 75 area. This is a big area for me on here, and I'm just going to be watching. You can see obviously right there on the chart how crucial this zone has been. So, and the other thing is I'm going to watch today. You know, it's probably not the day. We did fill in some of the poor structure that we created from the FOMC rally, but I'm just going to be watching the VVIX here coming off this really key area. It doesn't really like to get much lower, and this could be a trigger for some volatility. We're talking about a potential turnaround Tuesday. Today's, you know, it is mostly chop, but we did open up. I mean, we are still in yesterday's range. So let's see if we open up towards the lows. Or if we close down by the lows outside of Friday's session. But if we really do start seeing some sells, it would not be hard for us to retrace a lot of that move in FOMC. And just with VVIX being at this now, that again, it's speculation. You know, it doesn't mean go ahead and, you know, swing puts overnight or anything. But I'm just watching it at this spot, and especially with the thin structure, it's just something to keep in the back half of your mind. If we do see a strong down day, you might not want to fight it until the end. So we'll see if we get something. But
can I default it to the VIX?
Go for it. What?
Can I default to VIX?
Yeah.
Oh, okay. Yeah.
Yeah, and that's the normal. Yeah, that's at like 12. I don't know where it is right now. Oh,
yeah, 13.
The 1270. Watch that.
Yeah, it's similar. It can crack lower.
It can. It can.
Yeah.
But it's just this is just a big zone. So let's just see if we get, you know, a little pop from that.
Yeah. What I was gonna say there's one. Did we talk about Apple? So Apple is so we talked about, like, there's a lot of liquidity up around that like 170 kind of level. You're below all your major moving averages. As an aside, they're probably gonna start to tighten out. So base out kind of formation, one, and we are below this last kind of 2 volume shelves right here. So if we get another dip, sure, it's possible. I would say the last low before the very last low. So this is the very last low, 165, locked on October. Here's the low before the last low is 167.64. For whatever reason, you get a whoosh down. We got really close. I think that might have been it. Actually, that might be why it's on my radar. It might have been it here. And so now we're looking at this low right before that low. If this had hit and now this holds, which is what we just tagged this morning, I do want to have Apple somewhat on watch, even in all this bad news, somehow not continuing lower. And the chart, do we ever talk about oscillators in terms of divergence? So on the bottom here of my oscillator, it's not really divergence, but like this is very low, kind of like oscillate, like this very low, this not so much. That's good. Yeah, if this was lower, that'd be set up for like a major bounce, but that's set up for more like continuation consolidation to me. But what's the word I'm looking for? Constructive. We shall see. All right, man. That's it. Sharky, you got any last parting words? The Sharky theme song.
We got a short week, so let's just be mindful. We have the quarter end, the month end, so let's just be mindful and tactful with that, and kind of maybe let's lower our expectations. Trade safe, and I think that's about it.
Cheers, man. All right, guys. Adios. We are out. That's it.